Greetings, members, one and all of the Salivation Nation. What is driving gold and silver today? And what will drive it tomorrow? Let's explore! Now, this video will be focused on the events that are occurring right now, current events. And so keep that in mind in terms of perspective. But this is one of those videos that I think should stand the test of time, because you can insert anything from that news cycle, from current events, into what drives gold and silver today. And let's take a look at the prices today, and then we'll get into what some of those drivers are. So gold is up here as of the recording of this video, very close to the market close, to over $1,960 for gold, up over $17 an ounce. Silver's up 40 cents. It's actually rising a little faster than gold, which is normally the case. But nonetheless, we've not seen it react quite like this, at least all the time. Platinum and palladium are both up marginally as well. Gold to silver ratio, which is something I do like to keep up with, is now below 77. I really feel it should be in the neighborhood of between 60 and 65 would be what I would consider to be a normal gold and silver ratio. So what is driving these prices right now? Well, it's the news cycle in a general sense. And what is in the news these days? It is geopolitical events with what's going on in Ukraine. And we're going to talk a little bit about that with the price movement today and this effect. But, silver price, we see it did get close to $26 an ounce earlier before a slight pullback there from this FX Street article here. And they rallied to 10-day highs on Thursdays, breaking back above the $25.50 mark. And at one point, nearing the $26 level. Prices have subsequently leveled off and taking gains since Tuesday's weekly lows in the $24.50 level to more than 4% increase. Silver prices were up alongside other precious metals despite a stronger U.S. dollar and higher U.S. yields, both of which would normally weigh on silver, and by the way, gold too, but especially silver. Focus was instead on long-term U.S. inflation expectations after the 5-year break-even rate hit a record high above 3.6%. This implies U.S. bond market participants see U.S. CPI averaging 3.6% over the next 5 years. The rise in inflation expectations since Russia's invasion of Ukraine has been steep and has unsurprisingly been a key factor in underpinning precious metals, which are viewed as an asset class that provides inflation protection. Indeed, silver and gold's resilience in recent days, despite the rally in the U.S. yield and the U.S. dollar as a result of the Fed's latest hawkish shift, has been quite remarkable. Was it not for recent geopolitical developments and the stagflationary risk that the Russia's war in Ukraine creates, the likes of silver would likely be substantially lower at this point. So the commodity strategist fearing the worst is yet to come regarding the recent rise in energy prices, and with the Russia-Ukraine peace talks showing no signs of headway whilst Western nations continue to toughen their Russian sanctions, we heard more announcements about today, precious metals are likely to remain underpinned. And so it'll be very interesting to see how that will translate. There's going to be some movements upways, sideways, but more likely it's concern now of increased sanctions, increased isolation of Russia from the markets, and even to the point where their gold reserves. There's been more talk about that recently, about Janet Yellen actually going to Congress and to talk about this legislation to try to freeze their gold reserves as best they can, the best the West can. Obviously, there's still avenues that Russia can use in order to liquidate their gold holdings. Gold prices, according to investing.com, climbed north gradually, approaching a solid local resistance around 1960 on Thursday. The precious metal also challenging a slightly ascending 20-day moving average. daily close above, which would confirm the latest breakout. And so on the weekly time frames, the prices stay well above the key SMAs, now looking more upbeat after sell-off witnessed last week. The bullion extends the ascend despite the rallying dollar, and the dollar and the Japanese yen pair jumped to the 122 figure for the first time since December 2015 and looks set to finish the third bullish week in a row. The main reason behind gold resilience in the face of the elevated U.S. currency is a geopolitical uncertainty surrounding Ukraine that keeps mounting as Russia-Ukraine talks fail to bring any significant progress. Western governments continue to introduce new sanctions against Moscow. So there's another. Risk trades have become more favorable these days, and the overall tone in the global financial markets remains cautious, adding to the appeal of the non-yielding precious metal. Gold prices will likely continue to advance north as long as tensions rise globally. So there you have it. And in the news cycle today, definitely is Russia and Ukraine, and everything that's going to sprout from that economically and politically. And obviously, as a war footing is engaged and people are dying, which is always horrible to hear about. And nonetheless, it is causing quite some havoc, not only in terms of wheat production and other things, but, metals like palladium are largely produced in Russia. So we're seeing a lot of things happening in the news cycle and the emotional reaction to it. It may not be completely logical, but it is emotional. Now, typically, this is one of those cases where the dollar is moved and strengthens against other currencies out there, and that's just it. It's only strengthening compared to other currencies. Well, that and the yen coming together as one to outperform the 122 level, but gold and silver are still rising, and this is because of these tensions. That is what's driving gold and silver today, and today being current events at the time right now. Could be a day, could be the next month, could be however long it is. Last year and the year before that, it would have been the coronavirus pandemic and the reaction to that. And again, anything that's in the news is going to be politicized, or people are going to have strong views one way or the other of it. But one thing we can't agree on, no matter what your views are on Ukraine or the coronavirus situation, the markets react to it, no matter what that news is, whether it's based in reality, whether it's been politicized. And the news will spin things, and the markets will react to that spin one way or the other. And obviously to some sense of reality and sifting through to find the reality as well. The markets react to that stuff, and this is part of the reason why precious metal prices fluctuate so much. Now, married along with that is what is going to drive the price tomorrow. And it's what is going to drive the price tomorrow, which that's a kind of a word that we're going to use to represent the future. In other words, down the road, what will gold and silver do? Well, I believe they will rise in time, in price, to preserve value, because by its design, the dollar, which I'm holding one in my hands right now, that has been known to lose value year over year. And by design from the Federal Reserve, it's just that as I record this video, it is happening at an accelerated rate. And that accelerated rate is known as runaway inflation. And it is now to the point where everybody is admitted to it. They first tried to spin it as being transitory to try to calm the nerves of the markets. But now everybody knows it's here, it's entrenched, and likely it's worse than the official numbers report, even when you account for the producer price index, which is well into the double digits. But even before that, we knew that by most measures, especially with the rising fuel costs and the like, that's going to be higher. So that is what is driving the price tomorrow, which means that likely we are going to see gold and silver continue to do what they have done for centuries and for thousands of years: preserve your wealth. And it is something that you have to look at in terms of the price on how it's performing. And then we also have to consider premiums when you go to buy the metal. And And, where are those premiums going to go? Likely they're going to be higher too because of inflation. Now, I don't know how you would compare that to percentage, just depends. We are not in a normal bullion market these days. Premiums are high all around. You have to really look hard to find a deal. They can be had. I got one today. Maybe I'll talk about that in a future video, but there are deals to be had out there. You just have to search them out and find them, but they are few and far between. But gold and silver is something that I want to encourage you to consider as the ultimate safe haven, storage of wealth, because your wealth is being dwindled away. Even if you get a 4 or 5% pay increase this year, your wealth is dwindling away. That's below the inflation rate, which is 7.9%, and that's the official number. So I prefer to save in gold and silver. I mean, I have cash on hand too. It's good to have some cash as well for emergencies if I need it right away, because I look at gold and silver as a last resort savings, something for the long term, for the long haul. For some people, it's a generational wealth transfer. For others, they will cash out at the time of retirement or a medical emergency or what have you. If there's ever a need, you can always sell and liquidate. But if there's ever a want, there's times to make that happen too when the price is just right, which is why I always tell people, hey, if you're not buying, at least hold on to what you have. When do you buy gold and silver? And when it's at record highs, likely that's not the best time to buy unless you really feel strongly that the price is going to go even higher than that, which is what many people thought back in 2011, 2012. They thought, well, after those big highs, it's going to hit there again, and it's a bargain. Anything below $40 is a bargain for silver when it reached almost $50. But you have to consider the mindset there and realize what is going to be driving the prices over the next couple of years and what are anomalies and what not. But driving it tomorrow will be the passage of time. You've heard that phrase in recent times, right? The passage of time. Well, what happens during the passage of time in terms of fiat currencies? They tend to dwindle. They tend to dwindle away, and they will eventually be reset or reformed into something else, and that's what's going to happen to the dollar. It'll probably be called the dollar, but for all intents and purposes, they have really started planning what that next phase is going to be, and likely a crisis will come to pass before it actually is implemented, to give people faith in something, faith in that blockchain, that same ledger system that will track your every move. And with an ESG means that, hey, if your score is bad, you won't have the access to the marketplace that somebody with a very high score would have, because it doesn't fit their agenda. And what is their agenda? Likely not a pure motivated one, that's for sure. Certainly it's not going to be about the environment for them. Certainly it's not going to be about social justice for them. They'll use those as guises, as a guise to control you, and so that where you can be essentially restricted in whatever way they see fit based off of their agenda. So there you have it. Let me know what your thoughts are in the comment section below. I hope you enjoyed this video. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.